Hi all, good evening and a warm welcome to today's webinar. Without much delay, let's get started into the webinar because I know that you have been waiting for quite some time. So let's get started to the webinar without much delay. So first, let me introduce our distinguished speaker. So officially, let me introduce our distinguished speaker for today's webinar. We have Dr. Sadaf Hashmi, the founder of Sadafs Finlab, a dynamic platform dedicated to promoting financial awareness and literacy among the masses. Additionally, she serves as a visiting faculty member at the prestigious Narseh Morji Institute of Management Studies. With her expertise in the field, Dr. Hashmi conducts a range of interactive workshops tailored to different segments of the financial markets. Her extensive research background includes a doctoral degree focused on examining the factors that impact internal capital adequacy assessment process ICAAP for banks in India, with a special emphasis to Basel guidelines. Welcome, Dr. Sadaf Hashmi. Before I hand it over to her, allow me to present a brief introduction on today's topic, understanding corporate financial statements. In the world of business and finance, a financial statement plays a crucial role in providing a comprehensive snapshot of a company's financial performance and position. A careful examination of corporate financial statements empower individuals to make informed decisions, assess investment opportunities, and grasp the financial dynamics of the corporate world. So through this webinar, let's gain a solid foundation in understanding the corporate financial statements. So once again, I welcome everyone into this webinar, and over to you, Dr. Sadaf Hashmi.
Thank you so much, Renu, for the warm welcome and very, very good evening. I really don't know the time zone that you are in right now, so just pardon me for that. So I welcome all of you to our interactive session that we are going to have on understanding different financial statements, or basically understanding what is in the financial statements and what we mean by annual report. Also, I have selected a company which is into a lot of sportswear and a lot of products which are provided for not just sports, but even activities like skiing, trekking, etc. So this will be interest of all of you. Any guesses for the same, you can write in the chat box. So as you all know that you will not be allowed to unmute, but that doesn't stop our interaction. Okay, so you can always put your concern or you can put your query in the chat box for me. And in between the sessions, I will have a look at the chat box and I will keep on answering whatever questions that you have. Okay, so we will keep on interacting and make sure that you respond in the chat box. So can you tell me any company which is famous for producing sportswear and all types of goods which can be used for, be it football, be it cricket, be it any sport you want to play, and also if you want to go for trekking or skiing, okay, you want to buy a cycle, you can go to this particular store and you can buy it. Yeah, any guesses, any idea? Please contribute in the chat box. Meanwhile, I'm just sharing the screen. Okay, no, Walmart is for all the different products, but this is only for pertaining to sports and trekking and such kind of activities. Okay. So I think now the name has been revealed. And it's Decathlon. Okay, so Decathlon has presence across 69 countries in different parts of the world. Okay, and Decathlon also is present or has originated from UK, and it's making an expansion into different countries and different markets for the purpose of providing all types of sports products. Okay, I will show you some videos also on YouTube that how they are trying to also create an awareness about sports activities and how they're selling the right gears, the right products, which will not just attract people towards sports, but also give them that safety and security. So I thought that it's important to look at such companies because they have good expansion programs. And second thing, We will also see the annual report and financial statement of such companies to understand their financial position better. So first, let's see. Okay, one second. The previous slide first. Yeah. So first, let's see that what are the different types of financial statements that we can refer in any company's annual report. Okay. And also, I know that you are not familiar with this term called annual report. So any idea about what an annual report is? Anyone? You can just put it in the chat box. Okay. What is an annual report? And what does it include? So annual report is a kind of a detailed document which a company prepares at the end of every financial year. In certain parts of the world, we have the financial year going as per the calendar year, that is Jan to December. In certain other parts of the world, we have the financial year going as even, September to October. In India, we have it as April to March. Okay. So in different parts of the world, we have it differently. More or less everyone is following the calendar year. So once 31st December is over, after 31st December, what we see is companies put up a detailed statement of what all has happened in the last year, how they have made a profit, how they have progressed, how they have expanded, and what are their plans to, put up their business in the near future. What do they wish to do in the near future? Okay. So therefore, in the annual report, I'll be showing you Decathlon's annual report. So in the annual report, we will be focusing on understanding what is the balance sheet, what it contains. If you remember, one of our sessions we had taken up to understand the annual report, or we had looked up the balance sheet of Apple Inc. Okay. So there we had seen how the balance sheet was prepared for the 2 years. So basically in the balance sheet, we see three important items, or we see three important categories. The first category is equity, the amount of money. So equity is the amount of money, the funds which have been sourced by the company. Okay. And this money is used for the growth and the progress of the company. This money is used for the company to run and survive in the market. Okay. So this is what equity is all about. Then we have liabilities along with equity. So liabilities is something that the company has to pay over a period of time. A simple example of a liability can be a loan. Okay, so companies are expected to, if they've taken a loan, if they've taken any kind of debt, they are expected to pay the loan in the near future. Okay, so that is a liability. Also, companies expected to pay the salaries. Companies expected to pay all type of expenses that they are incurring. And if they are not able to do that, then it would turn as outstanding. It would become a liability for the company. Okay. So this is what we mean by the term liability. Okay. Yeah. If anyone is having a problem in the audio or video, please try rejoining in. I think Zakaria, you are having some issue. Can you please try rejoining? Okay. Yeah. Then mostly when we look at assets, we look at assets are items which are, something which is positive for the company, which will make the company grow, which will generate the income for the company. So that's absolutely correct, because assets are items which generate the income for the business. So you have equity and liability. Okay. Equity are the own funds that the company has. Liability is something which the company needs to pay. And assets are items which generate income for the business. All right. So thereby, in a balance sheet, it is a combination of these three items. Going by the equation, equity plus liability is equal to the assets. If you want, you can even write down this equation. I am just putting it up on the whiteboard. So this is called the famous balance sheet equation. Universally used. Wherein assets are equal to equity plus liability. Okay, so this equation always needs to be balanced, and this equation means that the money which is coming in via the assets, that is going to help the business to pay off its liabilities, and whatever is left back will be a part of the equity. Company will retain some money and it will be part of the equity. Okay, it will be the retained earnings of the company or reserves of the company. So reserves or retained earnings is just like some money we are keeping aside. It is just like a safe deposit, and in future whenever the company wants any kind of money, there's a requirement, then they can use the reserves or the retained earnings. Okay, so this is what is our balance sheet equation, and this comes as a part of the balance sheet. Okay, if any questions related to balance sheet, please write in the chat box. And I'll be using the whiteboard also, so if you want, you can note it down and maybe you can make your own notes as well. Yeah. Then coming to the second aspect here, that is about the income statements. So income statement refers to the profit or loss statement. Income, earning statement, profit or loss statement. This statement talks about the fact that how much profit a company has made. So if you see, there is again a formula or an equation through which we calculate the profit or loss of the company. So a company, like say today our example or today our company is Decathlon. So Decathlon is selling, as I said, different types of sports and athletics wear and sports items and, these kind of goods. So the turnover, the sales or the revenue, which is generated by selling these products minus its own operating expenses, minus the expenses to run the business worldwide. Okay, so revenue minus expenses will be equal to a profit or loss. If revenue is more, it will be a profit. If expenses are more, it will be a loss. Again, I'm using the whiteboard to put this equation down. Yes. So income statement, okay, the statement which reveals the profit and loss for the company. Now, it is very important for the company to make a profit, okay? Though we may feel, we may not give so much importance, okay, to profit, but a company cannot survive, a company cannot expand and grow without profits. It can survive for some time without profits, maybe for a couple of years. But if you want a business to grow, if you want a business to expand and diversify, open up more branches, that will only be possible with the help of profits. Also, as a rule, I'm telling all of you that some part of the profits need to also be retained for future growth and expansion. So you should not utilize all your profits. You should keep some of your profits, maybe 25%, 30%. Some part of your profit you need to keep for some future growth and expansion also. Okay, so these are also some small strategies which can help you in your business, and you can note it down. Now going to another two statements which you can see here. One is the cash flow and other one is a statement of equity. So I'll just give you a gist about them. These are also compulsory now. All the annual reports are containing the cash flow and the equity. So what is a statement of cash flow? It shows how the cash, how the money is utilized in the business. Okay, I'll be showing you the cash flow statement also in Decathlon's annual report. How it is utilized in business, how it is being used in the business, it speaks about that. Okay, so we have three activities which are identified. Let me just take you to the whiteboard for now. Okay, so I think, so cash flow statement. It talks about the utilization of the cash and the monetary resources. So we divide the category or we divide the entire cash flow statements into three categories. Let me write it like this. So we write cash flow from operating or day-to-day activity. Okay. Then we have the cash flow from investing activity. So operating activity is day-to-day, all the day-to-day functions which are there. Okay, that all those results, all those transactions you will see here. So you can see specific transactions here in the operating activity, which you will not be able to see in any other balance sheet or any other statement, like even the income statement, you can't see the specific transactions. But in cash flow statement, I can see the specific transactions. Okay. Then I have investing activity. So in investing activity, I can see the transactions which are specific to the assets, which are specific to, say, you are buying a land, you are investing in a new office space. Okay. Any new investment that company is doing into asset, they are selling an old office facility. Okay. Or they are investing into server space. Now, as you know that server space is also something which is, an asset for the business. It is a virtual asset. So all of this, we can see these specific transactions in the investing activity. Third activity that we have is cash flow from the financing activity. So financing is how much money company is utilizing, or what transactions are occurring for financing or running the business. How much of loan has been taken in a particular year, how much of loan has been repaid, if company is issuing more shares, if a company is issuing more equity shares. So all these transactions we can see in the financing activity. Okay. And at the end, after merging or combining all these three together, we will get the net increase. We might get a positive figure, we call it as a net increase, or we might get a negative figure also, because company might be utilizing more money, they might be utilizing more resources. Okay. So if it's a positive figure, it will be called as a net increase. If it's a negative figure, it will be called as a decrease. So what does cash flow statement indicate? It indicates the utilization of cash in the business, which is systematically divided into three activities. First one, the day-to-day, that is operating. Investing activity, which is for assets, buying and selling of assets. And third one is the financing activity. So financing activity is where we're talking about the money which company is raising for utilizing its growth. Maybe it could be in the form of equity, it could be in the form of loan. Okay, so all those transactions you will see in the financing. So this is about the cash flow. Now coming to our last statement, that is a statement of changes in equity. So when I say statement of changes in the equity capital, so nowadays companies are going very public. What we mean by public? Earlier, the format of businesses was like, I have started a business, for example, okay, and I am putting money into it, and I am the 100% owner. Okay, so everybody knows Bill Gates. Can you tell me which company is owned by him? Bill Gates. Can you tell me in the chat box? Which company? Yes, excellent. Microsoft. But is Bill Gates the 100% owner of Microsoft? Is he the 100% owner? No. There are other people also who have a ownership, who have a stake in the company, and these people are the investors. Okay, so this is a public company. Public company means that you do have a person who has started and who is the owner, okay, or the founder. Now we call these people as founding members. But you also have external investors who may not be founding members, but they have infused or they have invested their money into this company. So because nowadays these companies, these multinational companies are public companies, so it's very important for them to show how their equity position is. Whatever money they have raised from the investors, how they're utilizing this money, what are they doing with this money, how they are using it to fuel the growth of the company. Okay, so thereby we have a statement of changes in equity to show the equity utilization to the investors of the company. Okay, so this is what is the most important aspect when we talk about a statement of changes in equity. So these are the four important financial statements, and I've given you a gist as of now that what these statements contain and what is the objective of each of these statements. Okay, if any question up till here, you can put in the chat box now. So we are now versed with the important financial statements, which we are going to very soon see. Now I'm also going to show you this infograph of some of the facts or details as of Decathlon, okay, and why I selected this company. So as you can see that Decathlon is growing at the rate of 9%. And because now, like, I think just yesterday was the International Olympics Day, okay? So across the world, the entire awareness about Olympics and sports is really increasing and growing, okay? So thereby, when we're talking about a company like Decathlon, like it has a massive potential to grow and expand worldwide, and that's what it is doing. In 2019, this was their total sales, around 12.4 billion euros. Okay, currently, as per 2019 figures, it's operating in 69 countries, but this has grown up a lot in the next 3 years. Also, they have a very good and happy customer base. Also, I'll tell you that Decathlon produces quality products, and they understand price sensitivity. Okay, they understand that there is a lot of price sensitive behavior which customers exhibit, which customers show. Okay, they know that there are certain countries where people want to buy good quality products and they may not be willing to pay a very high price for it. So they are not a company which is selling very premium and expensive products like, Nike or Puma or Adidas. Okay, these are like the main brands which we have across the world, but Decathlon is not a brand which is selling such kind of premium products. Okay, Decathlon is a brand which is for everyone. Okay, you don't play sports, but you go for maybe a normal walk or a jog, and you want to just buy some t-shirts for jogging or walking. Okay, you will get it at Decathlon. Good quality and a great price. You're just going for a picnic with your friends and you want a small picnic bag to put your stuff into it. Okay, you can get a small picnic bag at Decathlon, again, like for a very nominal price. So this is what Decathlon is aiming to penetrate into each and every household, to penetrate to customers worldwide, to provide quality products, and that too which are very, very price sensitive. They are not very premium and unaffordable, and they are looking for targeting the masses, and it's not a brand which is only meant for the classes. They don't have such a kind of a USP. Okay, so this is the reason, because if you see this brand expanding in your country, then you would know and you would be familiar about it. Now, also here you can see there was the record increase in the invoices or the receipts. In 2019, Decathlon reported 428 million increase in the receipts as compared to the last year. Okay, so this is what we are seeing, that there's a massive increase in the shopping, the buying of customers, around 428 million increase in invoices. Okay, so this is what is really, really significant in terms of the company. Okay, now just I will take you to the YouTube channel of Decathlon. And I would just like to show you one or two videos. Just give me a second. Here is my page. I had opened it for all of you. Okay, just to get acquainted with what kind of products we sell. So number one, when we are understanding financial statements, it's not all about numbers. From where do the numbers come? Okay, we have to understand as investors, or even as business professionals, or even as students of management and finance, that the numbers come in from the products and services. You talk about a simple brand like Coca-Cola or Pepsi for that matter. How do they show numbers on their financial statements? They show numbers by the products that Pepsi and Coke is selling. Okay, by the units of Pepsi and Coke which is being sold across the globe, right? So the numbers on the financial statements are derived from the number of products which are sold across the world. Okay, so let's have a look at this. Things to be packed for the next hike or trek.
Up for an outdoor adventure but unsure what to pack? We got a couple of things you can put in that bag. Navigational devices. A map, a compass, and a GPS device are 3 essentials that'll work for your next trek or hike. Headlamp. A headlamp or torch will help you navigate through wilderness after dark. First aid. It's vital to carry a first aid kit and know how to use the items inside, such as treatments for blisters. Knife. Knives are handy for gear repair, food preparation, first aid, making kindling, or other emergency needs. Emergency shelter. Always carry some type of emergency shelter like ponchos, raincoats, or blankets to protect you from wind and rain. These were some must-haves for an outdoor adventure. Still feeling underconfident? Visit blog.decathlon.in for a detailed insight. Link in description.
Okay, so they're directly not promoting the products, but if you want to buy any of these, what that says is that yes, you can buy it from Decathlon. Okay. Just one more quickly, I'll show you just to get a little more insight. Okay. Yeah, so say for example, if somebody wants to buy winter jackets, okay, so we just quickly see this.
Are you planning a trip to the mountains but are confused as to what to wear? Don't worry, we got you covered. Here's how you can choose a winter jacket in 5 simple steps. Step 1. Determine the purpose of your jacket. Winter jackets vary for hiking, low-intensity cardio, or other activities. Step 2. Depending on your purpose, choose the required insulation. There are 2 basic kinds of insulations you can choose from. Down insulations are ultralight and extremely warm. On the other hand, synthetic insulations are waterproof and comparatively inexpensive. Step 3. Depending on the weather conditions, select an outer shell. The basic 2 choices are either hard shell jackets, which are wind resistant, or soft shell jackets, which are water resistant. Step 4. Based on the temperature of your location, look for the lining material of your choice. Step 5. Finalize your winter jacket based on the additional features you fancy. Some features you can look out for are pockets, hoods, zippers, packability, etc. You are all set to pick the right winter jacket for your trip. Still feeling underconfident? Visit Decathlon blog for a detailed insight. Link in description. Are you
Okay, so this was just to get you a little idea about the products or services which Decathlon provides. Now we will go to the annual report and let us see what all is contained or what all is provided in a company's annual report. Now, how do we find annual reports? So you can just do a normal Google search. You can write annual report of and the name of your company, and then you can write the year. Okay, so you can type this in the Google search. Also, suppose sometimes it may not be easy to get it through Google search, then what do we do? So if not possible to get it through Google search, then what you can do is you can just go to the company's website, okay? Go to Investors Corner, and in Investors Corner, when you click on that, you can get the details of all the annual reports which company has prepared for the past years, okay? So company's website, Investors Corner or Investors Relation, in this particular section, you can find the company's annual report. Now, this is the latest one, which is available as on December 21, okay, in Decathlon's website. So we can see that the annual report firstly contains the information about the company, what the company does, what kind of manufacturing or products and services they have, okay? So all of those details will be contained in the company information. So it's very important when you're investing in the company to understand what kind of business they are doing. Also to see or have a vision that in the next 3 years or 5 years, will this business be able to survive? What is the next big competition for this business? And how can this business grow? Okay, how they're planning to grow and how they're planning to expand. Okay, so company related information will always tell us that. Strategic report will talk about the expansion. It will talk about the numbers. Let's keep on scrolling through also. Then we have the board of directors. So can you tell me in a company, okay, why we need to appoint board of directors? What is their role? What is their work? Why do we need to appoint the board of directors? Yeah, can you tell me? What's the role of board of directors? What do they do? For okay, oversight or overlooking. What else? So basically, investors need to appoint the board of directors, okay, for the purpose of keeping a track of how the business is being managed, how to manage the business. That is what is the work of the board of directors. So you will also have the director's report, and in the director's report, you will see that what all work, what all challenges, what all problems have been faced by the directors, and what are their analysis and what are their suggestions. Then we have auditors report. So auditors are the people who are examining the financial statements, who are examining the company after the financial year is over. So they come in after the financial year is over and they are examining the company. They're examining the company's financial status to see whether company has properly reported them in the statements. Okay. Then we have statement of the comprehensive income. This is our income statement. Then we have the statement of changes in the equity. Okay. And then we have statement of financial position, and the notes will be the detailed analysis that we will be getting for each and every aspect. Okay. All right. So let's have a look. Yeah, so you see here, this is the strategic report. So it speaks about the company structure, when it was formed, etc., when it was registered, what type of a company it is. So right now, Decathlon is a privately owned company. It's not a public company like a Microsoft or a Netflix or Amazon. Okay, it's a privately held company, right? So as on December 21, they have around 1,747 stores worldwide. Okay, it was started way back in 1976. So, it's a very, very old company, but the first store was opened up in 99. Okay, this was the revenue increase. So very important how a company's revenue or turnover is growing every year. And even you can see that it has a very good balance sheet position where the total liabilities are exceeding the assets by almost 11,495,000 pounds. Also, strategic report will speak about the figures. Okay, so VAT is the tax. So we will leave the taxation part for now because different regions and countries will have different tax. Let me come on to some indicators, like we have the gross margin ratio. So gross margin ratio is nothing but the ratio of the profit to the turnover. Okay, gross margin. This is the manufacturing profit. Gross margin is also known as a manufacturing profit. And it is a ratio. It is calculated like how they got this 39.6%. It is the value of the gross profit or the manufacturing profit divided with the total turnover. So this 39.6 indicates that as compared to the last year, the gross profit or the manufacturing profit went up by almost 4% or 3.9%. Then you can see the value of the investments going up. Again, investments have almost doubled up, and the reason is, you see the investments increasing because companies' profits are growing up. They are not just utilizing the money for growth and expansion, but they are also investing it into the business. And this investment will be a good financial backup in case company has any need and requirement in the future. Increase in the number of customers and the number of the employees. Okay, number of stores. So only 4 more stores in the last year, but they will be having more stores coming up. And this is also an indicator of pleasure at work or the happiness index at work. Okay. Yeah. So also just to point out that if you see in the strategic report, they will speak about all the challenges which the business will face. Okay, so after speaking about their indicators and growth, they will speak about the challenges. Like what's the competition that they are facing. So they will always face the competition from the local brands. Okay. Also, because of the foreign exchange, what will happen is that in countries across the world, we have fluctuation in the foreign currency. Okay, so because of the fluctuation in the foreign currency, we can see sometimes it will be beneficial for businesses, sometimes it will not be beneficial for businesses. Okay, so fluctuation in foreign currency will also cause some losses or profits. Environmental matters, as we all know that there is so much of advocacy and talk which is happening about climate change and sustainability. So that will also have an impact on the business. Okay, Human Trafficking Act. So these are some challenges. They have a strong policy against corruption, against the COVID-19 pandemic, because even in the year 21, we did have the presence of the COVID-19 pandemic. Okay. Then we also have impact of Russia-Ukraine war, which will also come on the business. All right. So this will be a detailed report. Okay, yeah, I will also now take you through. One second. Yeah, so this is the director's report. It's so detailed. Yeah. Okay, so this is all the details which are there. Now we will move directly to the financial statement. This is the auditor's report. They will give an opinion. So auditors will also write about whether the information which is given, the financial information, this is a true, this is correct, or there is some problem in the financial information. So they will also give their opinion. Also, the auditors will have to ensure that the financial statements are prepared in line with the financial rules and regulations, in line with the financial laws. Okay. Okay. So this is the auditor's report. Now comes the statement of the comprehensive income. So statement of comprehensive income symbolizes the statement of the profit and loss. Okay. So you have the turnover or the amount of sales minus the cost of sales, that is the cost of manufacturing. Then we get the gross profit, which is your manufacturing profit. So everybody, my objective today for today's session was just to get you known with these terms that you might come across or you might see in any financial statement, so that it will become easy for you to at least read and understand the P&L, that is the income statement, and the balance sheet. Because once you know the terms, then it's easy for you to understand, okay, whether the company is growing, it's doing well, or it's not doing well. Okay. Then you can see the administrative expenses. So administrative expenses are like marketing expenses, are my office expenses, the salaries which I'm paying to my employees. All of this will come in the administrative expenses. After we minus the administrative expenses, we get the operating profit or loss. Okay. This operating profit or loss is also called as earnings before interest and tax. Okay. Operating profit is also referred to as earnings before interest and tax. And then we might also minus any impairment. So impairment means reduction in the value of asset, of those assets which are used on lease basis, which are used on rental basis. Okay, I'm talking about right use of assets. So right use of assets refers to those assets which are used on lease or rental basis. If company has taken any loan, so what is the interest that they are paying on this loan? Okay. Then loss on any extraordinary activities or normal activities of the business. The loss for the year, okay, it will be shown here. So in this case, the business is making a loss. As you can see, the negative figures are reported. Okay. So unfortunately, your business has made a loss. This is a statement of changes in the equity. Okay, so you can see here that we have the share capital, that is the equity capital which is given, the reserves or the retained earning, and the cash flow hedging reserve. This is the reserve which is created for the purpose of managing the investments. Hedging means minimizing the risk, so the reserves which are created for managing the investments. Okay. So you can see, and even as investors, they can see how the equity is being utilized by the company. That's the whole purpose of the statement of changes in equity. So you can see, okay, there was a loss. So how this loss has been written off? It has been written off in the retained earnings or reserves of the company. Okay. So this is the purpose of the statement of changes in equity. Now we have the balance sheet. Okay, so in the balance sheet, we have the non-current or the long-term assets. Then we have tangible assets, that is the assets which are there for the long term in the business. The right use. Okay, right use of assets are the assets which are available or taken by the company for lease basis. Okay, and the deposits. So these are also assets for the business, like they have invested the money into deposits which they can use for future. And current assets are for short term. So non-current assets are for more than a year. The company and the business will be using them. Current assets will be for within a year. So stock, because it's a business which is into consumer products. Okay. So the stock or inventory. Debtors. So debtors are customers who are purchasing the goods on credit basis. They will be making the payment in the future. Deferred tax asset. So deferred tax asset is where they have not been able to make the payment, okay, of or they have made the payment rather. Let me explain it this way, that they have made the payment for the tax, and they have made an over and above, they've made an additional payment, and this will be adjusted in the future. Okay. So 3 zeros are, that means it is in thousands. Okay. So one is that the money is kept in the deposits, and the current assets will be again deferred tax assets. So this money is additionally paid as tax, and this will be adjusted in the future. Cash and cash equivalent means that this amount will be in the cash or the bank balance of the company. Then we have current liabilities. So as I told you, that balance sheet is nothing but it is a combination of equity, assets, and liabilities. So we have current liabilities, the liabilities which we need to pay in the short term. So you have creditors, you have vendors from whom you are buying the raw materials. Okay. Short-term lease liabilities which we need to pay. I'm just stopping in between a little bit, a little pause for a few seconds, so that if you want, you can note down. So current liabilities are the liabilities which we need to pay within the year. Okay, we have short-term lease liabilities. So the liabilities which we need to settle, we need to pay off within the year itself. Company can also create some long-term provisions. We are keeping aside money to pay for in the near future. So any provisions which they are creating for liabilities, for expenses, for payment of taxes, any long-term lease liabilities, okay, lease liabilities which need to be paid in the future over a long span of time, maybe 3 years, 5 years, or more than that. So this is what you will see in any company's balance sheet. and the asset side and equity and liability side needs to tally. Okay. Then last section of the balance sheet is the capital and the reserves, the equity and the reserves. So you have the equity capital here, which is the privately owned company's capital. So there's no change in this. Then there are retained earnings or reserves. Okay, this is a very crucial and important point, and companies should focus on increasing their reserves every single year. And we are also seeing the cash flow hedge reserve in the statement of changes in equity. So that is also shown here in the balance sheet. So this completes our entire balance sheet with all these items shown. Okay. And then after the financial statements, you will have something like notes to accounts. So notes to accounts will be giving a detailed explanation about every type of item that we have in financial statement, how the company is utilizing it, what kind of rules and regulations they have. All of the details will be given in the notes to accounts. Okay, so this was just helping you understand some terms and what the financial statements are and what is contained in the annual report. So I've just taken you across the understanding of financial statements and the annual report. And just to summarize this whole thing before I open it for your Q&A is every company's financial statement has to give me 3 answers. One is, of course, company's profitability. Second is about the company's growth, and about the stability of the company. If I don't get these 3 answers, then definitely there is something missing in the company's financial statements. Okay. Now I open the forum for the Q&A. Okay. And whatever questions you would like to ask, you can ask.
Thank you, Dr. Sadaf. And like she has said that, now the floor is open for asking the questions and your queries. And we could see some questions in the chat box also. The last question, it says, what is the meaning of 3 zeros below the year? That's the first question we have got.
Yeah, so I answered that. Those 3 zeros represent the thousands. Okay,
yeah,
so whatever the number is, after that, you'll have 3 more zeros. So that number plus 3 zeros and that many pounds or that many, that's the whole figure.
Yeah, thank you. And if you're having a quick doubt, please do raise your hand so that I can unmute from my end. Or else if you are in a position not able to do, you can put in the chat box as well. Yes, we have a question. Yes, I have unmuted. The candidate name is Low. So yes, please go ahead.
Hello, hi. Can you hear me? Can you hear me clearly?
Yes, we can.
Hi, my name is Lawrence. I'm from Nigeria, Abuja, Nigeria. So I actually enjoyed the class. Thank you so much. I really enjoyed the class. I really gained a lot. But I'd like to ask a question. In the statements that you just displayed, I noticed something around the net liabilities and the net current, like total liabilities and the total net current liabilities. I don't know what's the difference between both of them, because I actually got lost there. I didn't know the difference between both.
Okay, can I just share the screen once again with the statement? Will that be possible?
Yeah, that would be fine.
Yeah. Let me see if I can just share.
Yeah, others also, you can raise your hands.
Okay, Renu, I'm not able to share. Anyways, I will just explain.
Sure, I will. I'm making you the host, so you can.
Yeah, now I can. Yeah. So here you can see, yes, you're absolutely right that we have something which is called as the net current liabilities. Okay. Now, what we mean by net current liabilities, as you can see over here, we have the current assets. So from the total liabilities, if I only remove the current assets or from the current liabilities from 96,380, when I minus the current assets, now why are we minusing? What's the logic behind it? The logic behind is the current assets are there in the business to generate the income so that we can pay off the liabilities. So after minusing the current assets, what is the position of my liabilities? That is why we are having the net current liabilities. So we can see that after minusing the current assets, we still have a lot of liabilities which company will have to look into how they are going to pay this remaining amount of 41,294.
Okay. Thank you so much. I understand now. Yeah, thank you.
Yes, the floor is again open to ask your queries. Like I said that if you're unable to unmute it, you can put it in the chat box also. So you can read the question for her and she can answer you. Or else you can even raise your hands also so that we can unmute from our end. So in between I have put a Google form also. We would like to hear from you. So please do fill in the Google form also, so that if you want to see these recordings of this class, then we can send it to you. Also, I would like to introduce you to our course, the Level 7 Diploma in Accounting and Finance. So today what Dr. Sadaf had actually taken. If you want to have an in-depth knowledge about all these things, yes, you can join our program. So if you are interested in joining also, please do fill in the Google form, because the course will cover almost everything in accounting and finance, ranging from how you do an investment analysis to how do you analyze, how do you prepare a financial statement, how do you analyze a financial statement, and how you do the auditing, and like she had described to you, how that strategic auditing is happening and all those things. So all in detail, you can study from there. So like I said that, if you're interested, or if you are interested in knowing about the webinar more, and also we would like to hear the feedback from your end, please do fill in the Google form.
Also, I would just like to say that whenever possible, whenever you get a chance and you are like curious knowing about companies' growth and progress, you can go on the respective company's website and look into their annual reports. At least now you can start getting the annual reports for all the companies for the year ended December 22. They will be easily available. So any company, like say you want to know, like say Netflix, it was so much into discussion where the subscriber base is going down. So Netflix is a company now, you will not believe, they have ventured into online gaming because they know that, just by selling content in terms of the series or the movies, that's not going to be very remunerative for them. It's not going to generate a lot of revenue. But now Netflix has come up with games because as they've seen that people are so much hooked on to their smartphones, and there is a very big community of people in the age group of 18 to 25 largely who are playing these online games, and of course even beyond the age of 25. Another thing is Netflix is also now expanding into the food area, and they're also planning to come up with restaurants. So just to know about companies and how they would be managing all this, you can definitely look into their annual reports and their financial statements. Yeah, any other questions at your end? Okay, so this is like a standardized format which I have shown you, which you would see, and these items you would see across many companies' annual report. The more you review it, the more you go through, I think the more you will learn. Okay, so I would like to really thank all of you for being such a great audience. And I hope that you understood all these terminologies, because once you understand the terminologies, it will be very easy for you to pick up any company's annual reports and study it. Okay, so thank you and wishing you a great weekend.
Thank you, Dr. Sadaf, and thank you for accepting our invitation and being with us for this webinar and for sharing a very valuable information. And I would like to thank all the dear participants as well for taking time out in your weekend and for attending this webinar. So once again, thank you all and thank you, Dr. Sadaf. And have a great weekend.
Thank you, everyone. Bye-bye.